Welcome to Friday Takeaway. We go on the road with toll operators Litrak and IJM Corp, but we need to talk about how it was a fairly muted week for global markets as news flow on the trade war held, fairly steady. Trump and Xi did hold their talks last week and promised to hold off on tariffs until the deal is hammered out. Trump, as always, thinks he won, but several trade and investment experts say that China seemed to have the actual better end of the deal. But whatever it is, experts also say the damage, it's already done, which is why a lot of them are keeping an eye on US jobs data that is due out today, because it will most likely weigh on the Fed when it makes its decision on whether to cut rates when it meets at the end of this month. Also to note, Trump is still attempting to mess with the Fed in his favor by nominating candidates who think like him. But good on Chair Jay Powell and his troika for resisting and still having a firm hand on direction. Tycoon Tan Sri Said Mukhtar Al-Bukhari has bought UMNO's 11.09% stake in Media Prima, making him the third largest shareholder in the company. It was actually revealed that private company Aurora Mulia, where Said Mukhtar's son is a board member, bought the stake at 60 cents per share. Media Prima, of course, is the owner of Newsstraits Times, TV3, outdoor advertiser Big Tree. It comes at a time when they're loss-making and facing shrinking ADEX because it navigates a shift to digital, a process that is clearly hurting as the group undergoes restructuring. Finally, on Monday, Dewan Rakyat passed a motion that will compel all members of parliament and their immediate families to declare their assets. Yup, all of them need to open their kimono, so to speak, and they have 3 months to do so. Of course, the opposition MPs didn't like it, didn't like how it was passed, and PAS called it un-Islamic, saying that it wasn't good that people declared their wealth because of security risks, and Pekan MP Datuk Sri Najib Razak called it unfair because some of them may have other sources of income such as being lawyers or architects. Oh, and also reported this week is the fact that Najib owes 1.69 billion ringgit in back taxes. This week, we take a look at highway operators Litrak and IJM Corp as the question of whether government will be taking over multiple highways looks closer to inevitable. Of course, Litrak has already accepted the MOF's offer to buy out its 2 concessionaires, which actually caused the share price to jump. But the big question is, what is left after? On the other side, we take a look at IJM Corp, where toll highways are one of its major segments, but any of their highways up for sale and what's the possibility of them selling? Let's take a closer look. Lingkaran Trans Kota Holdings, or better known as Litrak, is the country's last pure listed toll concessionaire holder, ever since Plus was delisted all those years ago. It's the owner of the LDP and Sprint that, according to 2017 traffic volume, has almost 250 million vehicles passing through its gates. Gamuda is a major shareholder with 43.6% stake, as are PNB and the EPF. Litrak and its associate Sprint have agreed to the Ministry of Finance's offer to take over its concessionaires for a total effective equity value of 2.75 billion ringgit, which works out to about 5 ringgit 20 plus change a share. According to Litrak, the board of directors all found the offer fair and reasonable. For the public at large, though, MIDF research points out that buying these highways will prevent compensations of more than 5.3 billion because the toll hikes would be frozen. Commuters could save as much as 180 million ringgit per annum. MIDF likes the deal for sure, saying that the anticipated offer price is at a 28% premium to its target price pre the announcement. Also, it notes that in terms of outlook, average tollable volume on both LDP and Sprint have actually been dropping since 2015, and that it will remain muted as more people take public transport. Litrak's share price had actually been trading around 4 ringgit 20 for the longest time, but it has since jumped and is now in spitting distance of 5 ringgit, which is still, though, below analyst recommendations. Still not a done deal yet because the devil, as always, is in the details, and they're still hammering out the final terms and due diligence needs to be done. But here is the big question. So once Litrak sells off all it has, what is left in the company? The frank truth is that Litrak will be a shell, and so far management has not indicated what will happen once the highways are sold or what business it will be looking for next. So the company will be in need of some serious soul searching. 3 research houses cover Litrak. All of them have a buy of the company. Target price, all the same. Unsurprisingly, 5 ringgit 21. Maybank, which is also positive on the deal, like MIDF, thinks that any future traffic growth is definitely capped. One of the country's best-known conglomerates, IJM Corp's business covers construction, industry and infrastructure. Specifically, though, we are looking at the highways it owns, and that includes Pesraya, NPE and Lekas. Besides Malaysia, it also holds toll concessionaires in India and Argentina. Could the government actually be looking at IJM's highways? Well, the original plan was actually to list the toll assets at one point, but the group put that aside when the new government actually came in. But according to UOB Kay Han, it is not a stretch to think that the government would buy more highways, especially those with matured traffic flows and shorter concession periods. Specifically though, it named the NPE as a possibility. But that aside, it actually ended FY19 very strong. Quarterly earnings jumped 13 times to just over 240 million ringgit because its infrastructure biz did better. Both its toll and port concessions did better, and its investments in Argentina actually paid off. The good news is that a lot of analysts pointed out that the latest earnings came in above expectations. But most don't mince words at how challenging the outlook remains. Public Invest Research points out that although the order book is 7.8 billion, performance of this segment, meaning construction, is actually below expectations. Not only that, public thinks that the progress of works and billings will remain low for about 2 quarters to come. The latest 5 research houses are predominantly hold on IGM, with 1 underweight, which is from M Invest, and 1 sold buy recommendation, and that's from Hong Leong Invest. Target prices range from 1 ringgit 16 on the low end to 2 ringgit 96. Looking at the share price though, the stock closed at a 52-week high of 2 ringgit 50 a couple of days ago. It came off a little, but it's still below the highest analyst target price.